I'll keep doubling, you keep bluffing. You've got nothing, I'll keep hustling.
Hi guys, today we don't have Fibonacci Lee to my left, but we do have Gareth Soloway. How are you doing, buddy?
I'm doing really well. Great to be here. Thanks for having me.
Awesome. Thanks for joining us. This is our first stream for 2023, and we thought it wise to tackle some big questions. You know, we've been through what can be seen as a really horrible 2022 for most. People got wrecked, people got stolen from, liquidated. There's so much reason and bad, energies floating around in the crypto space. But with a new year, normally breezy, new energy, new hope and aspirations. So with me, Gareth Soloway, we're going to start tackling some of those questions to see, is 2023 going to be as doom and gloomy as 2022? So maybe you can venture a little bit of a slight hint on your answer for that.
Absolutely. So I think 2023 is going to be a transitional year, and that's exciting for me. So it's not to say that I still don't think Bitcoin might head down a little bit lower, but I think it's going to be the key year where it puts in a bottom. And I actually think that it will start to become the asset that everyone has hoped it would become, which is kind of a safety asset, an asset where when the government is printing money, it actually does, become the safe haven, or when the economy is going badly, I actually think it becomes the safe haven. So I do think that coincides with regulation. So I do think 2023 is going to be a really intriguing, interesting year, full with lots of opportunities.
Yes, and just as a side note, while we're on this, we are giving Carl the Moon and Crypto a run for their money with our profile, with our video pic. So I have to say, Gareth, I was looking for a few images of you on the internet, and I got that one, that bullseye one that I thought, I'm going to go with that. But
Nice.
Guys, for anybody that is new, definitely not going to be, we're going to be taking it serious and having a serious look at 2023. So, there's all these bearish narratives, Gareth, around lower lows and possibility of small sideways. There's always, it can go up, it can go down, or it can go sideways. It's three things. How does those narratives impact your day-to-day trading?
Yeah, so for the most part, and that's a great question, because as a trader or a swing trader, or even as an investor, it's so important for us to kind of think outside of the box, because when any one side becomes too big in terms of hearing that narrative and only that narrative, it tends to draw us in, and we really want to stay independent to really see what the truth is, right? And so for me, it's looking at the charts, and the charts are the clearest, most precise way to get through the noise into reality. And so, for instance, if we look at the Bitcoin chart here, I don't know if you can pop it up, but one of the things that I love is that Bitcoin actually showed us that a mini breakout was going to come in, right? So you have this pivot high, which was your FTX high pivot, down to this high, and you could see how price was kind of going here. It crept above, paused, kind of retested that line, and then it's gotten this little bit of a bullish move. Now, as soon as we get the first bullish move, we start hearing about, the bottom's in, we're going to go to new all-time highs in 3-6 months. In reality, that's not what it's telling me, right? So this is a short-term bullish move, which is inside of a bear market. But the biggest thing to me is this high pivot right from the FTX collapse. So if price were to get above that, like let's say we do have an incredible bull run and we take out this psychologically significant high, which was when FTX collapsed, then to me, now you can talk about the potential for a low is in and maybe a new bull market is on the verge. But as long as we're inside of this is a classic bear flag pattern, right? So, you basically take the drop and this inside chop, and that's bearish overall. So again, it's just the purity of the charts where you can have these little intra-bear market rallies, but until significant pinpoint levels are taken out, you have to be in the camp that we're still in a bear market. That means Bitcoin and crypto is vulnerable for more downside, and you want to be protective against that.
So do you subscribe to the narrative that you stay true to the trend and treat it as if it lasts forever? Does that simplify things for you?
Yeah, so for me, the trend is your friend until it isn't, right? So you have to continue to go in that way. as traders, we just have to be very aware of when the trend changes. So for me, if price were to eclipse this big move down, that would be a potential trend change for me. But for me, there's a couple things that I worry about with Bitcoin and why maybe it hasn't quite bottomed yet. Number one, in past cycles, in bear market cycles, prices dropped 80+%. We haven't dropped that much yet. We're getting close, but we haven't dropped that much in Bitcoin's price since the all-time highs in 2021. And then I think you have to look at it and say, here we have the Federal Reserve, and this is the first cycle bear market where Bitcoin does not have printing money going on. And so the question is, does that mean the bear market low is going to be less or more of a downside move? And again, to me, it would make sense that it would be even a little bit worse because the Fed is not printing money. And again, one of the things that I'm really keen on is if we can get regulation in the space. I know a lot of people don't want regulation, but I think after you saw what happened with FTX, you need transparency. Then I think that could be a catalyst for the next bull run leading into the halving in 2024.
You said something interesting about the retrace from Bitcoin. Actually sparked an idea. You said normally Bitcoin retraces about 85% on average. The best chart that we can use to have a look at that, or just to give an idea of the narrative, but normally if you take all the Bitcoin price action and literally just put it on a logarithmic scale and measure the dips from the highs. But one thing that I did pick up on that, and maybe let's bring up this chart and let's discuss this as a little quick talking point, is when we look at all these retraces, we normally get these 87%, like you say, but it was normally preceded by Bitcoin doing enormous gains, 12,000%.
It's true.
There you had 38,000%. But funny enough, the last time round, Bitcoin didn't really perform so significantly powerful. And normally what we do is, if we switch on the all-time highs, what we would find up till now is we will never even come close to the previous all-time high. Bitcoin just tends to get away from people. But this is the first time we're trading below the previous halving cycle. If you switch on the halving, the all-time high. So would it still be wise to use the narrative that we need an 85% correction before we can call bottom? Due to the fact, would that still be a relevant thing that you would be really hard focused on, due to the fact that we didn't get that immense move to the upside?
Yeah, so I think you actually bring up a really good point, is that there's a chance that it doesn't do that. The thing that would make the most sense to me in regards to it maybe not doing that is to think about the stock market, right? So as the stock market gets bigger and bigger, yeah, you have bear markets where we'll see, a 25, 30, 40% move down. But the more mature, the more investors that a market has, the corrections are usually smaller. Even if you go back to 2008, 2009, the Great Recession, which was a horrendous collapse in the financial system, the S&P only dropped 66%. Mainly, again, it's a mature market. So I think there's something to be said for that Bitcoin is maturing, and it's going to draw more interest from a larger group. And then ultimately, they could be in a position to maybe not correct 80 to 85%.
Okay. So with that said, maybe what we can do is we can then bring up your chart, and if you can, let's have a look at the S&P 500 and the legacy markets and see where we're at in relation to that. I also see that the guys couldn't see my screen. I really suffer from bad internet, guys, so I do apologize for that. But Gareth's screen comes through beautifully, and that's why everybody is here for. So on the weekly, I saw a while back that we had a strong bullish divergence. Now, for me, divergence, I use it as maybe as an idea generator, saying that there's the potential of something happening there. We've seen divergences being deleted, and we also saw that you can have two or three sequences of bearish divergences in a row before something turns around. Bitcoin was a brilliant example of that. So with the strong bullish divergence that created that pivot on the S&P 500 around 34,800, what is your view going forward?
Yeah, so my view is somewhat on the more bearish side for the S&P 500, and one of the reasons is you can see on the weekly chart, but even more so on the daily chart, is that as of now we still have this downsloping trend line which is keeping price in check. And then after this most recent fall, we've seen kind of a bearish flag pattern start to develop. Obviously, markets have had a big move up here over the last couple trading days, but we're coming right into this trend line here. And if you basically look at this, right, so you had this scenario where you popped up, you fell into that level, then you went up here, you hit it again, you went up here, and then you broke through. And there's a tendency for markets to retrace to what I call the scene of the crime, which is that trend line before the next leg down. And so as long as we stay within this pattern, this would be, again, a bearish pattern with then a target price of that yellow trend line, which we actually got really close to on the S&P today. And I'm in the camp that, looking at the macro picture, there's no doubt that the economy is slowing down. The jobs numbers have still been very strong, but we're hearing about layoffs every single day from the likes of Meta and Amazon and Google and Microsoft. And at some point, that's going to filter into the macro and really cause a recession, in my opinion. So I think that then you have a scenario where the earnings of companies are going to need to be taken down, and which means prices of those companies, of those stocks, have to come down. So I actually think I've gone on record saying that I think the S&P will at one point be down as much as 25% in 2023 from where it opened. And, it's one of those scenarios where I think the Fed is really missing the boat by tightening too much. Absolutely, they have to get control of inflation, but at the same time, they're over tightening too quickly, which is then going to probably spin us into a recession.
What would be your idea of them slowing down? Because I mean, they were crying and saying that their whole strategy is based on a soft landing, and over tightening is now that soft landing approach. It basically destroys that. So, what would your idea be? Them staying where it's at now? I think it's at 4.25, 4.5, and then staying there, or literally bringing it down now? Because I know from history, when the Fed pivots, that's when the recession happens.
Right.
Because normally what people think is, oh, it's over, and that's that supply-demand dynamic, and then I weathered the storm, and that's when it hits you. Traders normally then prepare for that. So what would be your approach? And I know they're hell-bent on not having a recession. They have the data just as us, and they are manipulating with the idea to prevent that. So what is your take on that?
So to me, when I look at what the Fed has done is they have moved too quickly. Like, to raise rates, if you think about the percentage gain, and again, a lot of times you'll hear comparisons back to the 1970s with Volcker and into the 80s, and how he raised interest rates from 12 to 18%. And if you look at that, what percentage move up was that? So it was about a 50% hike in interest rates. But what you look at here with the situation now is we were at 25 basis points, and now we're basically at 5. That is hundreds and hundreds of percentage points increase. And so you have to think that that's going to have a more dramatic effect on the economy. Now, I think that for the Fed, we're going to see a situation where, and they've even said this, they're scared about repeating the mistakes of the 1980s, and it's going to make them not want to lower interest rates right away when we hit a recession. And I think that's going to be the big issue for the market. So I expect this year 1 or 2 more rate hikes, probably 25 basis points each only. And then I think they're going to go into pause mode and just keep interest rates where they are for a significant amount of time. And I think that's where the market is going to get sketched out. It's going to get scared, because they're going to see, or the economy is going to go into a recession, and then all investors are going to say, okay, Fed, can you lower interest rates? And they're going to say, well, we can't do that because we're worried that inflation is going to rip higher again. And that key, remember, we have not had a stock market or an economy without the Fed intervention for now, 15 years? Since 2009. So that's 14 years since the Fed has been printing money. And so it really creates this expectation of the investor that the Fed will always rescue us. And I think that's why asset prices in the stock market are still as high as they are. We think that the Fed will come to the rescue, and I don't think they will this time, at least not initially.
This brings a different question to light. I mean, Bitcoin, I'm talking exclusively now Bitcoin, not the other coins and their specific applications, was created in the ashes of a major bailout. and has yet to be tested. Now, the whole foundation of Bitcoin is around the idea that, it is there to rescue us in these times. But do you honestly think that money would find courage to actually flee to something as volatile as Bitcoin if something like that should happen and we should go into a deep recession, which would be Bitcoin's first recession?
That's true. That's a great point. And I personally do see the need for Bitcoin. I think that Bitcoin was created out of the ashes of the financial crisis and the Fed printing money, and the idea that, governments just printing money is not sustainable in the long run. And I do think that even though the Fed is being resistant to lowering rates and doing stimulus, there will be a point where the economy gets so bad that the Fed will have to print again. And again, the idea hopefully is inflation is low enough where it doesn't make inflation go into some sort of hyperdrive. But I do think that that's the reason Bitcoin has been created, is to be that digital gold. Well, maybe it wasn't created initially as the digital gold, but I do think it is going to become that. And I do think there's a need. I mean, if you look at various countries, third world countries, the way that so many of their citizens are now using Bitcoin, that's the need there. For me in the US, the reason I hold some Bitcoin is for the idea that the dollar will eventually be printed and no longer be the reserve currency of the world. And so it gives me a store of value versus the US dollar. So I do think that either way, even through this nasty bear market, Bitcoin will survive. I think a lot of the alts won't survive. Maybe the top 20 will, but I think for the most part, you'll see a big cleansing of the crypto markets.
That's one thing we haven't seen. Look, there was a few epically big projects, cleansings and so forth, but we don't have that mass die-off that brings the idea. And that kind of scares me, because if I look at the way that the S&P is currently sitting in, one lower low, the RSI is still in a way that it's tracking up. So maybe let's bring up your screen. If we look at that, you can see that the RSI is still tracking up on the S&P 500 quite aggressively, which means even if we go and we make a lower low, the probability is that RSI is not going to go and make a low. It's going to print another strong bullish divergence. And that might be the shakeout event that we are waiting for and hoping for. That might be the big cleansing where people just, end up, getting out of those shit coins, going into something more realistic, sustainable, and then create that next run.
Yeah, I'm in that camp too. That's one of the things that bothers me about people calling the low of Bitcoin or the low in the crypto markets here, is that you haven't seen a cleansing. And the answer, you have to say, how do thousands and thousands of coins survive in this environment? And I just don't think that that's a true flush out. Like if you look at the .com era, there were a ton of .coms, and by the way, the .com era, as you know, it was the same kind of thought process. You had so much money rushing into these things. They were penny stocks that became $1, then became $10, then $50 stocks, really with no reasoning behind. There was no fundamental reason behind. You could argue that they were shit coins, right? I mean, they were essentially the same thing. And so when the .com bubble collapsed, many of those went bankrupt. Some got bought out, but it really was a consolidation to a point where you had a few mega players that survived and everything else went out of the industry. And I think that's where we are right now. For me, I'm looking at this and I'm saying, this doesn't strike me as a bottom. I don't see the fear and panic in the crypto markets right now amongst retail investors that tells me there is a bottom yet. So yes, you can have bull market rallies within a bear market, but to me, it just can't be, it likely shouldn't be the low just yet.
And even if it goes and makes that higher high, so get above 28, I think it's 28, where we really need to start looking at, okay, maybe it still needs to come and test the lows. And that will be then the optimal time for us to really start thinking about accumulating, because then that's that strength in the market that you would want to see. And we're still far away from that. So it's still early days. But okay, that being said, the halving does play a big event in this. So where are you on the camp of halving? Because for me, the halving is currently, the projection is that it's going to be around March 2024. So that being said, where you're on that camp, because that's not far off. And if we go and have a look at crypto and Bitcoin in its previous cycle, between the all-time highs, and I want to venture sharing my screen to show this to you. So hopefully my internet allows it. So I'm just going to try, and guys, just let me know if that happens. So basically what happens is we try and put a timing factor on this. And I mean, I'm just using a normal time fib, and I'm just looking at the 618 level as an example. Now, take note, the beginning we already said we didn't have the same highs and lows, so it's very risky to look at this and create the trend, but that's what we have at the moment. So if I put this time fib between halvings, so from halving cycle to halving cycle, what we do find is around the 618 on the lateral time for Bitcoin around the halvings. That's when we start creating this accumulation level. Doesn't mean we can't make a lower low within an accumulation as a shakeout. And we did exactly the same between the second halving as well. So around that time is when we had the big shakeout event, and from there on we started to slowly creep up. And if we take this narrative to where we are today with the ideas where the next halving is going to happen, we smack in that range where Bitcoin historically has found itself range bound to start creeping back up. So the question that I want to ask you on the halving wise, would you consider this and preemptively not try and time the bottom?
Yeah, so definitely the timing thing is a tricky one, right? So I think that the halving always works to the advantage of Bitcoin. Anytime you have it become more expensive to mine, that's going to force supply to be cut down on new Bitcoins hitting the market, and therefore price has a tendency to move up. But having said that, I think that it's just one piece in an overall much, much bigger puzzle for Bitcoin moving up. So for instance, we mentioned it before, but if you get regulation, I think that draws in big money. And I'm one of those, I'm more of an investor. Right. I'm an investor, so I actually want big money, institutional money involved so that price goes up much, much more than it otherwise would in a shorter amount of time. And so I think you need that. You need that institutional involvement. The only way you're getting that is with some sort of regulation there. So I think regulation's a key. I think the halving is key. And I think ultimately cleaning out the industry of these FTX type scenarios so there's trust, right? I mean, when you have a situation where investors don't even trust having their money on exchanges, that's problematic. I mean, that's horrendous for the industry. And so if you can build that trust back up, that's an instant winner in terms of potential upside on Bitcoin along with the halving.
And that's that negativity that you're talking about, that distrust, that creates what I think we could potentially see. And that means that's like you just explained it within your Bitcoin. I'm just going to bring up your chart for explanatory reason, that this rally that we're experiencing might go above that upper level of yours, or might file below this and create some sort of like a disbelief. Nobody trusts in it in any case. And then when it starts going to these highs, we tend to FOMO in because we weren't active or proactive at the bottom. And that's when the market punishes you purely because, the long-term narrative isn't there just yet. A reason for us to move money, store money, and have that 2-year, 3-year, or new 4-year goals for people entering, or that adoption that needs to occur.
Yep, I agree 100%. I think that makes a lot of sense.
I'm going through a few questions here, Gareth. I don't want to keep you too long. I'm just quickly want to see, because I saw a lot of people popping up with some really good questions here. So I'm going to bring a question on from Salah, and it says, what is the most bullish thing or thing that can move BTC to higher highs that you can think of?
For me, the biggest thing would be some sort of regulatory reform where there's a forced transparency, there's a mandatory audit, maybe 4 times a year of cryptocurrencies. I think for me, that would be the most, that would make me, I mean, I can just speak from my personal viewpoint, but right now I have some investments in Bitcoin and in crypto. I would be much more willing to put a lot more money into crypto if we had some sort of, transparency, right? And so even, and I'm not a whale by any stretch, but even I would feel more confident putting money in if I felt more secure about the industry as a whole and the fact that there's hopefully no more bad apples like Sam Bankman-Fried or anything like that. So I think that's a key one. The other thing on a technical chart, and I'll just throw this out, is that one of the things that got me bullish in the last week or so, looking for this pop in the near term that's materializing, is we saw lots of negative news. I mean, we saw, I think it was something with Gemini going on. We saw other things that were very negative. And what we saw is price was not declining. And one of the key things I look for is when there's negative news stories and price doesn't go down, it tells us there's accumulation going on. And ultimately, you can see the results here with a nice little move to the upside. So that's more of a technical point.
That's true. And I have to say, and it caught a lot of people off guard. And that's the beauty of one of these moves. The technicals, they're always there before the news, and we tend to blame the news, but news is literally the excuse that people will use. That's right. that didn't act when it was appropriate. I saw another question here about the CME gaps, so I'm going to bring it up here and I want to share. What about filling the CME gaps? Now I know there's a CME gap for Bitcoin at the bottom. What is your stance on the CME gaps? Do you trade to it? Do you really consider it?
I don't. I basically would use that as a secondary factor. So it's not a major factor like it would be for a stock or a commodity close. And mainly I say that because you have a scenario where if you go to the spot trading, you're not going to get those same gaps. So there is some sort of power to gaps when it's on the CME, but it's not going to be as powerful. So I wouldn't trade just off of those factors. If I had a second, like let's say you had a 3-bar surge into a gap, then that would be something I would look a little closer into in terms of getting a bounce.
DXY on the weekly is now testing previous weekly channel breakout resistance. It will turn into support and get a huge bounce. Do you think that that's probable?
So which one was that?
The DXY.
Dixie. All right, let's take a look at that. DXY here. Yeah, so the Dixie to me, it's looking like it's actually breaking down here, right? So we see this trend line right here. It cuts through here. You hammered right here, and we're actually breaking lower here. So for me, I think there's a little bit more downside on the Dixie here. I have a next pivot point right here at this level around 101.22. That's what I'm looking for. And again, what that tells me is if the dollar is going to continue to fall, number one, that's good for Bitcoin probably in the near term, the next few days. And number two, it's probably good for the stock market in the next few days as well. So I think that's very, very interesting to kind of take note of here. Let me look at the weekly. I know you were asking about the weekly. Yeah, the weekly to me, same thing. You can see there's a little bit of an area of support here, but it looks like it wants to now head down towards this area right here around 101.
For me, I think that, the amount of momentum that's currently in that Dixie, I personally would say that would be a realistic, probable area where people would want to try and start betting against the other side of the market. One worry that I have is we've got the Dixie always trending in the opposite direction of Bitcoin. The Dixie goes down, Bitcoin does well, and Dixie goes up. And then we've got the bailout narrative that every halving Bitcoin's going to go. What is your feeling on the fact that this is becoming such a common knowledge now that the reality is that what if this doesn't happen this time? Because the laws of trading and anything is supply versus demand. So we're all sitting with our Bitcoin, we're all sitting and saying, yeah, it's just going to go up. But if there's no adoption, how does that really sit with you?
Yeah, so just going back to what you're saying about too many traders being on one side of the market, you're 100% right. When that gets too overweighted in one direction, you will see a breakdown of that correlation. So just going to the dollar, for instance, there will be a point where the dollar drops and it actually becomes a negative for the market. And you can even think about this on a macro perspective of, well, if the dollar continues, like let's say the economy does slip into a bad recession. All right, so we're in a bad recession. That obviously is going to put pressure on the US dollar. Does the Fed stimulate? Does it do this? Does it do that? But let's just say we continue to stay in a recession long term. The dollar is going to continue to fall, and the economy's, the stock market's not going to continue up. It's actually going to start to go down if the recession looks like a pronounced long-term recession. So I think that's important to kind of keep an eye on, that you will see this shift where right now everyone says, oh, dollar up, stocks and Bitcoin down, and vice versa. But I do think there is a point where it changes, and I think that's coming sooner than later. Now with Bitcoin, it's more interesting, right? Because if Bitcoin is like gold, then a dropping dollar would still be good for Bitcoin versus the stock market in a recession. So it's going to get interesting over the next 6 months, I would say.
I was looking at, I was listening to a few guys during the day, and everybody talking about the recession or the negativity only hitting us in the second quarter or the second half of the year. Do you share that sentiment, or do you think that it's going to come sooner?
I think second half is likely when the government will say that we're in a recession. Whether or not we're in a recession earlier, I think a lot of people feel like they're already in a recession. But I do think that the numbers will dictate it by the second half of 2023. And that's going to be the big kicker. I think that's why the second half of the year could be a really nasty year for stocks, but maybe a saving grace for Bitcoin, where Bitcoin starts trading inverse to the economy, where it becomes a safe haven. Because one of the theses I've had is that if you get in a scenario where the economy continues to get worse and worse, earnings are going to fall more and more. No one's going to want to invest in stocks when we don't know when the recession is going to end. But where is there now transparency? If Bitcoin gets that kind of transparency via regulation, now all of a sudden institutional investors say, okay, listen, we're going to get out of our positions in stocks, but let's go look at cryptocurrency now, at Bitcoin. And I think that could be one of the reasons why Bitcoin does well in the second half.
The market tends to be forward-looking. It tends to be looking at pricing in what the potential could be. So I will buy the dip if the potential is there for regulation or for something like that. So these are things that we maybe need to be on the lookout for. Not necessarily act on them when they're there, but rather act on them when they are kind of rumor. That there might be something happening. You always want to buy the rumor and sell the event, because that's normally when big money has now priced in that scenario. Last big question that I want to ask you is China, because China does play a big role. This is something new. Ray Dalio basically beautifully says that every cycle there's a monetary powerhouse, and then they get overthrown. The US overthrew Britain, and so how do you think that can potentially play out as well as something for the DXY, meaning that the DXY might trend down, but money is moving somewhere else or being spent somewhere else?
Mm-hmm. Yeah, and that's actually one of my theses for why I think the dollar continues to get weaker over the coming years, is that I do think that China wants to take over and have the digital kind of yuan become the reserve currency of the world. And remember that if there's any sort of new reserve currency, remember that global superpowers and really every country has to hold a massive amount of US dollars on their balance sheet so that they can do transactions in terms of dollars. And so if all of a sudden, let's say people start having the digital yuan be the reserve currency, there's no reason for them to hold dollars anymore, and they can start dumping those on the open market, which will inevitably weaken the US dollar to the downside. By the way, again, that would be a positive for Bitcoin traded in terms of US dollars. But again, for me, I think China is going to be the big economy that's going to emerge here. They have multiple billions of people, and China is looking and saying, how did the US become this superpower? And the answer is by becoming a consumer nation. And when you have 1 billion plus people and you can get them into that consumer type mentality, now all of a sudden you have this juggernaut of an economy that kind of, you make money and you spend it in the economy, and it really can lift it. So I'm actually thinking that China becomes probably one of the better investments in terms of the Hong Kong market going for the next 5 to 10 years.
So you would actually be looking at markets around that area to start, getting your positions in, rather than a US or dollar or S&P 500s and so forth.
Yeah, for sure. Now we've had a huge, the Hang Seng has had a huge bounce over the last month or two. I think it's up something like 25-30%. So I wouldn't jump in now, but on pullbacks, yeah, I do think that is probably the market. Remember that when we went through COVID, the U.S. was looked at as the strongest market out there, and so money from overseas flooded into U.S. markets. Well, if you get in a position where the U.S. markets don't do good returns, investors, institutions are going to say, okay, well, where are we going to take our money next to go? And I think they're going to look at places like China. South America is another very interesting one as well for those returns.
I actually wanna end it off, but I saw an interesting question here about the Treasury rate keeps going down. So the question here is, how is the Fed going to react if the 2-year Treasury rate keeps going down? The bond market rates keeps going down, and the Fed. So is the Fed going to raise rates or hold?
I think the market, like you said just a little while ago, the market is forward looking. So I do think the Fed raises rates just a tiny bit more, but the market already anticipates the pivot where interest rates might actually start falling again due to a weak economy or recession. And I think that's why you're seeing the 10-year yield. And I can bring up that chart real quick here. If we look at the 10-year yield, we can definitely see that it is well off of the highs, right? So here was the high back in October, actually, October and November. And you've actually seen, especially here, I mean, by the way, look at this beautiful chart. I mean, this is just everything I talk about in terms of retracing, right? So you had this area of support, you broke it, and then look at how price went right back there before continuing down. And again, what this tells me is that the bond market's telling us that interest rates will have to come down in the next 6 to 12 months. So again, I don't think the Fed cuts rates at least for the next 6 to 9 months, but I think by end of 2023 or early 2024, I do probably expect a rate cut.
Yeah, and that's going to be a forced rate cut in that instance, because they're going to be stuck between a rock and a hard place at that stage where, they need to choose the lesser of two evils.
That's right.
And that's what we're kind of betting on and hoping for. And hopefully at that stage, monetary crypto wise, the lesser of all the evils would be a Bitcoin or something like that playing out. So
that's right.
I want to continue on there.
No, I was just going to say you're 100% right. It's the lesser of two evils. So the expectation for me is, and the forecasting is showing that inflation coming from 9% to 5 or 4%, that's the easy part. Going from 4 to 2 or sub 2 is going to be the part that takes years. And the Fed is going to have to make that decision whenever the economy really gets in a bad recession, is to say, okay, well, we have, let's say, 12% unemployment, which is a very high unemployment number, but inflation's still at, let's say, 3%. Do we want to stimulate? And I think, honestly, the higher unemployment goes, the likely outcome is, yes, they will choose to stimulate even with inflation being slightly elevated.
That's kind of the problem that we have. The unemployment doesn't want to come down at the moment. And that's what gives them the leeway to keep on hounding with the interest rates. So, it's a sad thing to say. You almost want to see people lose jobs now in order to know that you can start planning in the opposite direction. I want to talk about XRP real quick, if you don't mind. When we look at most alts in the good ones, because the question that I want to ask you is, say we go through the next 6 months and we end to that point, and we sit in a situation where you want to start buying up some bargains. Would you be looking at a coin like XRP? And the reason I'm saying this is, if I look at Ethereum, if I look at Bitcoin, those scenarios, those coins in the last bull market, performed better than the previous cycle. But XRP was one of those that didn't even get to the previous all-time high. That makes me believe that it's more of an accumulation range, or it's going to be flattening out. Would you be looking at coins like that? What would be the criteria for you, if that would be one of it, to start thinking about buying some bargains should the market present it?
Yeah, so for me, the biggest thing with an XRP is I need to know what this judge decision is. And again, as far as I know, there hasn't been a specific decision yet announced. And so that anytime you leave, your investment in the hands of one individual like a judge, there's always additional risk that you're taking on. I mean, he might have woken up on the wrong side of the bed today, and he might, you just don't know. So the first thing I would want to see is, what is that decision and how does it impact XRP? And then if it's a positive thing, then I would absolutely look at it as a longer term success story with an investable, thesis. The only other thing I would say is that, you see XRP trading down here like at 35 cents. There's nothing wrong with speculating, right? So as long as you understand the risks of any investment, you can say, okay, I'm going to put $1,000 of my 100,000 in XRP. Worst case, it goes to zero. I lose $1,000. Best case, maybe I make $5,000 or $10,000 on it. So the key is most individual investors, retail investors, they don't think that way. They think I have to go all in, which means they can also lose 100% of their money. In reality, you want to be diversified, but it doesn't mean that you can't take a shot if you like something with a small amount of capital. Just understand the risk that you're getting into.
That brings us into the beauty of what it is we do for a living. We trade. We can debate these big things, and it ends up still leaving us with thousands of questions. But the trading narrative around it is, while that is being sorted out, we can still pull money out of the market. And you're renowned for that as well. And where can people find you to get a little bit of more of Gareth Soloway in their life?
Yeah, Twitter's a great place to find me on Twitter at Gareth Soloway. So basically at my first and last name. And then if you're interested in stock trading, I do it at inthemoneystocks.com. And if you're interested in crypto trading and analysis, I do it at verifiedinvestingcrypto.com. And it's been awesome to be on with you. I love talking charts.
I love talking charts, and I think if my internet only allowed, we could have ran a lot more scenarios through and debated them. Guys, the links will be posted in the description of this video as well. So don't worry, I'll make sure that you get access to Gareth. Gareth, I really want to say thanks, buddy. Thanks for taking the time. I know it's the beginning of the year. It's really busy at this stage. We all want to try and think. So making time for us, I really do appreciate it. And I think the community as well, they really enjoyed it. And hope to see you soon, back soon.
Absolutely. Yeah, thank you again for having me, and I look forward to our next chat.
Cheers, buddy. You have a lovely day. Bye-bye.
Thank you.
Right, guys, that's Gareth. Gareth, you are an awesome gent to have on stream. I really appreciate the time he takes. So I wanted to share a few more things, but the sad reality is it seems that my internet just does not want to allow for this. So I'm going to try once more, and I want you guys to just give me a quick button on the in the description to see whether my screen pops up. So I'm just going to bring my screen on. Can you see my screen? Just let me know. If we get a yes, I can continue. If we get a no, I'm going to sign off and call it a day, and we'll be back tomorrow. So I'm going to give it a few more seconds. Let's quickly see if my screen pops up and you can actually see it. Let's see. No screen. Well, that's it for me, guys. So I'm going to say thanks. Happy New Year for everybody. It's going to be a busy one. We're going to be busy. We've got a brand new crypto bot in our Discord that is churning out trades at a really good rate. And we want to spend the remainder of this December actually developing that a little bit further and making that accessible to you guys so that you can actually see how easy it is to trade and have something without a bias, without a sentiment, churn out these setups for us so that we can literally just action. So I'm looking forward to sharing that with you guys. And then I saw a new question. Can you please explain the boot camps? Okay, so the boot camp is a lot like what we did now with Gareth. In a way, we discuss coins, we discuss setups. So what we do is we also share our own trading. So what I like to do is I personally like to trade more on a swing. So what do I mean by trading swing? Swing means I can throw bigger money at it. It's still risky if you look at it that way. But once it starts moving, I can sit back and let the market figure itself out. I tend to like to do that, especially on daily and weekly time frames, meaning that I might not enter at 1000x, but I can enter, and now I can give the market 2-3 weeks to do what it needs to do to reach my goal. It's a slower, more relaxing thing, which gives me freedom to actually go do stuff during the day and so forth, because trading can overtake everything that you want to do and consume your whole day. But that being said, I love scalping here and there, and that's why that is there. So the bootcamp sessions is where we actually share. Both Lee and myself, we share our own setups, and we actually show you what are we going to do? Now, Lee's one of those aggressive traders. He's in and out, and he's always in a trade. And that's where he really comes to his own and shares all that. So the boot camps are daily live, and we share that and share our charts and how we go about that. And we also do scans and requests and so forth. And with the Discord, with the AI scanner that we've got, there's going to be a lot more signals and a lot on different time frames as well, which is going to give you guys a little bit more flexibility. And it went live on the Forex side today. So Forex setups and indices setups are going out now. So for those that are not there and want to join in as that as well, if you want to join our Discord, all you need to do is literally just scan this little code here at the top, and it will take you to the Discord. And then everything is neatly explained within the Discord. Last little thing, I just want to say thanks to Bybit. Bybit is a channel sponsor. We do have exchanges sponsoring our YouTube videos, and we like doing it because it gives us a sense of better technical support should things go wrong. So make use. If you want to open a Bybit account, the link is also in the description, and support our channel. As for everybody else, guidelines to the harmonic bot, that is what is going to be coming your way pretty soon. As we said, it is in the middle of being developed. So Lee is always excited about this stuff. So he shared it with you guys actually prematurely. I almost wanted to keep it a little secret for a little bit longer, but those guidelines will be coming your way. But the nice thing is, if you just plainly copy it and without looking at it, it still gives you a good 60 to 70% accuracy over a 20 to 30 trade sample size. So yeah, that's it. So guys, I'm going to say goodbye. Thanks so much. This is the first one of many this year. I do believe the market is going to quiet down. What I mean by we're not going to be seeing these insane, painful moves, and but it's going to create that narrative that we should stay away. And I love that narrative, because that means then we can really start looking at buying. Gareth also supports that as he explained today, and we're going to make sure to bring him and many more guests on this year, so that you guys can benefit from the pool of knowledge that is available on Twitter, and not just necessarily have to listen to us every time. I want to thank each and every one of you guys for joining in. It is outside our normal streaming time, for taking the time. I really do appreciate it, and have a lovely day, guys, and as always, keep hustling.
Hey, I got something.